All right, today we're diving into a really provocative idea about the future of money. It's called the Bitcoin standard, and we're going to unpack its core arguments, piece by piece.
So, let's kick things off with a question I think we've all asked ourselves at some point. Why does it feel like your money just doesn't go as far as it used to? You know what I'm talking about, right? That cup of coffee, filling up your gas tank, even the weekly grocery run. It feels like everything is constantly getting more expensive.
Well, according to the viewpoint we're exploring today, the answer isn't just random chance. It traces that feeling all the way back to one single decision made over 50 years ago. The whole idea is that our entire money system got a major overhaul, and that one change put us on the exact path we're on right now. Okay, so to really wrap our heads around this argument, we need to take a quick trip back in time. We've got to look at the history of money, specifically how we went from a system built on gold to, well, the system we have today.
For a long time, money was directly linked to gold. You add the classical gold standard in the 19th century, where money was literally backed by physical gold in a vault. Then, after World War II, we got the Bretton Woods system. Here, the US dollar was pegged to gold, and then every other currency was pegged to the dollar. But then, 1971 happened. In what's called the Nixon shock, the US just cut the cord, completely severing the dollar's link to gold. And just like that, the entire world was on a new system, what we call a fiat standard.
So, what's the big deal with this fiat standard? Why does it matter? Well, this gets us to the absolute heart of the argument we're exploring today. The claim that this system isn't just flawed, but that it's actually failing right before our eyes. First things first, what even is fiat currency? Simply put, it's money that isn't backed by a physical thing, like gold or silver. Its value comes from one place, a government declaration. It's legal tender because they say it is. So its entire worth is based on our collective faith and credit in that government. And the argument here is that this setup removes any and all natural limits on creating more of it.
And according to this thesis, this is the result. Just look at that number. That's the US national debt. It's a figure so massive it's kind of hard to even process. The source we're looking at points to this giant pile of debt, as a direct symptom of a system that has no brakes, no built-in discipline.
And it's not just about debt, it's about money creation itself. This chart really shows you the scale of what's been happening. We're talking about the Federal Reserve's balance sheet. In 2008, it was under $1 trillion. Then, it peaked at nearly $9 trillion. That's a nine-fold increase in about 15 years. This is pointed to as Exhibit A for an exponential and maybe unsustainable explosion of the money supply.
So what does all this money creation actually mean for you and me? Well, this quote from the source really gets to the heart of it. The central idea is that when you print more money, the money that's already in your wallet, in your bank account, it just becomes worth less. It's a way of framing inflation as a kind of hidden, slow-motion tax. And all of this, the argument goes, builds up to what the source calls a debt pyramid. Think of it like a giant house of cards. The global economy becomes so reliant on this debt that it needs more and more new money printed, not for growth, but just to pay the interest on the money it already owes. It's a cycle that, according to this view, can't go on forever. Okay, so that's the diagnosis of the problem. But the thesis doesn't just stop there. It proposes a solution, and that solution is Bitcoin, which it frames as a sort of digital gold for the 21st century.
And this chart really lays out the core contrast. On one side, you have fiat currency, which is described as unlimited, controlled by a central authority, and ultimately founded on a promise. On the other side, you have Bitcoin, which is presented as being the total opposite. Absolutely scarce, decentralized with no one in charge, and founded on the cold, hard certainty of mathematics.
And that mathematical certainty? It all comes down to this number, 21 million. That's it. There will only ever be 21 million Bitcoin. The thesis argues this is its most critical feature. It's not a policy that can be changed by a committee. It's a rule baked into the code itself. This is what's presented as the digital version of gold's natural physical scarcity.
Okay, this all sounds pretty abstract. So how would a Bitcoin standard actually work? What would that world look like? Well, the idea isn't that you'd buy your coffee with some tiny fraction of a Bitcoin. The thesis lays out a layered system, one that's actually pretty similar to how the old gold standard worked, just, upgraded for the digital age.
Think of it like a building. The foundation, or the base layer, is the Bitcoin network itself. This is for the big, important stuff. Final settlement, ultimate security. It's like the gold bars locked away in a vault. It's not for everyday use. Then you build upper floors on top of it. These are second-layer networks, like the Lightning Network, designed for all the daily stuff. Instant, super low-cost transactions. This is the digital equivalent of the paper money and checks that we used to use.
And here's the kicker. According to this source, this isn't just some far-off theory. The argument is that the transition is already underway, and it's happening in clear stages. It starts with individuals, millions of people using Bitcoin to save. Then you see corporations, like MicroStrategy, putting it on their balance sheets. And the final stage? Nation-states getting involved, with some countries even making it legal tender, and others debating it as a strategic reserve.
All right, so if this all plays out, what's the endgame? What does the future of money actually look like? The thesis we're exploring paints a picture of a world that is completely transformed by this shift. Let's dive into some of the predicted changes.
Okay, let's start with a big one, saving money. Right now, under our current fiat system, the argument is that just holding on to cash is a guaranteed losing strategy. Why? Because inflation is constantly eating away at its value. But in a world with a Bitcoin standard, the whole script gets flipped. Because the money supply is fixed, just saving your money could once again become the default, common-sense way to build wealth.
And if saving actually works again, think about what that does to debt. Right now, for most people, going into debt is basically required for any big purchase, like a house or an education. The argument here is that if your savings can grow, or at least hold their value, debt is no longer a necessity. It becomes an option, something you choose to do, not something you're forced to do.
And the predicted changes go way beyond personal finance. We're talking about huge societal shifts. The argument is that governments would have to be more transparent, funding themselves with taxes people can actually see, instead of through the hidden tax of inflation. Interest rates, they'd be set by actual supply and demand, not by a central committee. And international trade could be settled using a neutral asset that no single country gets to control. It's a pretty radical vision.
Now, the source material presents this whole transition with a real sense of inevitability. This quote sums it up perfectly. The idea is that as more and more people, companies, and even countries get on board, it creates a powerful network effect that makes the whole thing a one-way street, a ratchet that only turns in one direction.
And that really brings us to the final big question. The thesis we've just walked through boils the future of money down to a fundamental choice. Do we stick with a system that's ultimately based on promises made by people, or do we shift to a system based on the unbreakable rules of mathematics? It's a massive idea to chew on, and what comes next? Well, that's a story that's still being written.